I guess starting off, one question that I have is, do you believe that digital asset ETFs, by their nature, contradict the decentralized and self-sovereign principles that are core to Bitcoin and other cryptocurrencies? If so, how can this tension be reconciled with the broader crypto investment landscape? And let's...
Okay, that's an easy question. Wow, that's a lot to unpack there. I mean, I guess I'll hedge and say yes and no. I mean, on their... and this has been one of the criticisms of ETFs, is that if you look at the Satoshi white paper and the desire to democratize financial services, of course, ETFs are kind of a weird product. They wrap Bitcoin up, this decentralized thing, into a product that is digestible for the mainstream financial system, which can't currently buy Bitcoin in a whole bunch of product sets. So it makes it palatable. You can now use it in an IRA and in 401ks and all types of financial services products that are outside of DeFi. You could view that as a negative thing and say that it leads to the actual Bitcoin decentralized network being used less. You could view it as a positive thing and say, well, it leads to people getting involved in Bitcoin in a way they never would. And one story I have is I was out to dinner with a friend who's known me for a long time, has always thought the crypto industry is crazy, and was very excited because he pulled up his phone and said, look, I just bought Bitcoin. He's like, I caught up with you, and it was the Bitcoin ETF. So does that lead him to then adopt this and read about it more and maybe understand it more? Maybe that's a good thing. And then I'll close with one other final point that others in the industry have made. By having a Bitcoin and Ethereum ETF, and hopefully soon a Solana ETF, it forces financial institutions and fiduciaries to take a look at Bitcoin in a way that they never would before, because they have a fiduciary responsibility for their investors to look at a Bitcoin ETF versus an oil ETF versus a gold. And so it also increases conversation. So I'd say it's mixed.
Yeah, really comprehensive there. Kevin?
And I would agree as well. I was at a place in New York City called PubKey, which is known widely for a lot of the Bitcoiners to just get together and talk about the various components of Bitcoin. And there's a wide difference of opinion when it comes to having Bitcoin outside of the ETFs for those people that are purists, but those that want to have it and realize that the train is not going to stop, and there's going to be a lot more opportunities for the broader marketplace by having Bitcoin ETFs in place. Having the regulations opens up the door for a lot more people, as Hadley alluded to, because that is really where there's a comfort from the asset managers, from the intermediary parts of the marketplace. So it's going to lead to much more innovation in the marketplace that we're seeing right now beyond what you're seeing with the current ETFs in the market.
No, I think those are both great points. I think the U.S. and U.S. ETFs and the Hong Kong ETFs, they require a proof of reserves review, at least on an annual basis. So maybe we're not going to see the situation similar that we've seen with gold and silver, with fractionizing the gold and I guess paper gold, paper silver. We're not going to run into that situation with Bitcoin, perhaps, hopefully.
I mean, one other final thing that occurs to me, which is kind of funny to think of, is that they're also a Trojan horse. And, I believe it's also inevitable that securities will end up being tokenized on open public blockchains like Solana. So one day, maybe we'll see a Bitcoin ETF that's actually wrapped and delivered by Solana blockchain network.
Yeah.
So I think the story's just starting. If it brings in more financial value to these networks and more participation, I say it's a good thing.
Awesome. All right, Kevin, I have a question for you. From your perspective as an asset manager, what are the key considerations and challenges for advisors when integrating digital asset ETFs in their client portfolios?
What I've seen is that many advisors themselves have used Bitcoin or other digital assets for their own portfolios, but they're hesitant to use it with their broader clients simply because, one, there's a lot of education that needs to be done for those individual clients. Two, given the volatility that we've seen in the marketplace right now, it creates a lot of conversations with clients that likely for a small allocation for most wealth management clients, it could create an issue from the overall business standpoint. But I think having that available, and you're seeing a lot of the advisors who tend to be more forward thinking, it's a big plus for them, because having them to be able to talk to clients about it, if they're comfortable, is a real asset gathering tool.
Yeah. And is there, I guess, a percentage of the portfolio that they would recommend going into these, I guess, risk assets?
Most studies have indicated 1 to 5% in that area. And what you're seeing is the risk return characteristics are very positive in that. But I guess to the same extent, what you're seeing is the performance of various digital assets over the last 2 or 3, 4 years has been significant. So maybe it's skewing that a little bit, but it's very positive in terms of wanting to get that allocation into the portfolios. But it's where does the advisor position that? And in my opinion, it's either in an alternative sleeve, or certainly for monies that are designated not for the near term, but for those assets that are probably 5 to 10 years and out.
Yeah.
So that way it takes a lot of the onus off the advisor and the client to be concerned about what's going on with near-term volatility.
Sure. And you say 1 to 5%. What would you recommend?
Well, if you look at certain studies, ARC did a study, and they were talking about over 20% for a client's portfolio in digital assets.
Wow.
That's probably a little bit much for most clients right now. But if you're looking to get a meaningful impact, it probably is in that 5% range.
Okay. I guess kind of going off your point about the growth and rise of digital assets, question for Hadley. Reflecting your time at Fidelity, did you foresee digital asset ETFs becoming as significant as they are today? And what key factors influenced their development in the space?
Yeah, so I was part of the very early team at Fidelity, which was an amazing experience, and so many great people came out of there. And I remember pretty distinctly in 2015, I think one of the things that was written up on a board was an ETF, and it seemed so far off and so insurmountable at the time, but it also seemed to make a lot of sense, especially because then this was pre-ETH and pre-Solana. We were dealing with Bitcoin, which, you can't argue as a commodity like oil, so why wouldn't it be wrapped up in an ETF? And then that led us to talk backwards around what are the most important elements of an ETF. And one of the most important elements is custody and secure custody, which was one of the reasons for Fidelity deciding to found Fidelity Digital Asset Services. So it was, I think, part of our early thinking. And it took a lot longer. It took a lawsuit by Grayscale, let's not forget, for it to actually get done. And kudos to Grayscale for leading the industry there. And now here we are, and it's very exciting to see. I think we're just getting started. I think a Solana ETF is next and inevitable. And then what I'd like to see is different types of ETFs that reflect different kinds of things, like staking, something we do at Marinade Financial. Different mixes of ETFs based on certain use cases, whether it's top 10 coins or AI coins or file storage coins, and let 1,000 flowers bloom. But yeah, that was something we definitely thought of very early on.
Awesome.
And Stephen, if you look at where the flows have come in early on, particularly with the Bitcoin ETFs, it's really going to 2 major providers. It's going to BlackRock, and it's going to Fidelity.
Right.
Both, in my opinion, is because of their brand recognition in the marketplace. So there is a comfort level among investors on who they're placing their assets with. The company I was with, as well as some others, offered 0 fees for a period of time. But flows certainly were much more tepid than some of the others in the marketplace. But I do believe that the reputation, the client base that certainly Fidelity has at this point from a retail investor perspective has also been part and parcel of that.
So you do see the growth of maybe smaller firms outside of BlackRock and Fidelity getting access to, I guess, offering their clients ETFs, Bitcoin ETFs?
Sure. Well, if you look at Bitwise as an asset manager, they're doing a very good job, and they've focused on the asset manager, the advisor community significantly since their inception. So they're doing a very, very good job, and they've raised about $3 billion within their Bitcoin ETF. Ethereum as a whole, even I've heard a number of folks say that they believe that is one of the products that could have a large percentage increase. It just hasn't taken in the flows as yet.
Right.
But you've got firms like Grayscale who've migrated from the trust over to the ETF. They've done a very good job. They've also got a significant amount of clients on the individual business through private placements, which is also going to be very important for the growth of the marketplace.
Yeah, and I guess going off that, what would you see that would shock more flows, whether that's inflows or outflows? Would you think that's kind of going to be following the greater stock market, how the other ETFs are doing? Do you think it's following gold? I guess, what are your thoughts there?
If you see rates beginning to fall, then that would be a plus for the ETFs. Again, you're looking at 80% of the flows still coming in from individual retail. So some of the folks are speculating at this point in time. Others are looking at it for asset allocation. If you're looking at capital markets as an indicator of where it's going to go, I think that's going to be less driven by the wealth management part of the marketplace, but more so from the hedge funds and also from the individual owners.
Gotcha. And I guess, could you share some insights on how traditional finance institutions currently view digital asset ETFs and what's required for broader adoption among the more conservative asset managers? Sounds like you're pretty cutting edge, leading, forward thinking. I guess, what are your thoughts to get more of the conservative side of the house on board with the ETFs?
Where we've seen initial interest certainly is within the RIA community. One, because there's fewer hurdles. They operate independently, so they don't have platform requirements that the wirehouses would. I think that, and you're seeing pockets of RIAs who have adopted ETFs in general, the traditional ETFs early on, and now they're looking at this as just a newer asset class that they can put into their portfolio. Where you're beginning to see a lot of interest from the larger investment pools is from the family offices. One, because they're looking to get lower correlated asset strategies into the portfolio. So someone was talking about technology earlier. So think about this as just another technology sleeve that can be offered in there. So that's also groups that have the research that is needed to be able to have the confidence to invest in those particular areas as well. Conservative asset managers, it's going to be a while.
Right.
It's just right now the volatility just doesn't fit in with what a lot of the conservative asset managers
and I
are doing.
imagine, it's just a matter of time if their customers are asking for it. Perhaps it's going to drive them to start offering it in the future. It's demand
Right.
end of the day.
It's a little bit of the tail wagging the dog right there, for sure.
Question for Hadley. I guess, as a chief commercial officer at Marinade, how do you see the custody business evolving to meet the needs of digital asset ETFs? And what are the major challenges facing custodians in this space?
So at Marinade, we're the leading staking marketplace on the Solana network. So unlike anyone else in this space, when you stake with Marinade, you're actually custody agnostic, and we don't run any validators ourselves. We take that stake and we distribute it to multiple validators, adjusting every Solana epoch, which is about every 24 hours, to receive greatest yield and greatest security and decentralized of the Solana network. And so, unwinding back from that custody agnostic piece, obviously custodians are a very important part of the ecosystem. To your question around custodians and ETFs, a former colleague of mine, David Schwed, who's now the CISO of Robinhood and was the COO of Halborn, wrote a great piece sort of noting that one very big risk of the ETFs as they currently are is custodial centralization. So pretty much everyone is with Coinbase except VanEck, which I can't remember who they're with. Someone shouted out, and then Fidelity, which also, of course, self-custodies through Fidelity Digital Asset Services. So as we sort of think at Marinade as the inevitability of a Solana staking ETF, we also then think about we need a democratization of custody solutions beyond Coinbase. And all kudos to Coinbase. It's not that they're bad. It's actually a sign that they've been very successful, both in how they run their platform and how they run their business. It's just more indicative of the sort of ecosystem we live in and the maturation and challenges that custodians come to. So what I expect to see and what I'm excited to see, and I think BitGo is making some entrees into the space. I think I read something today with them and maybe 21 shares. But I would expect to see more custodians come on board. begin to support the ETFs. And if I was an ETF fiduciary, I would probably want to be multi-custodial for my ETF. It's a risk mitigant. Wouldn't want to put all my eggs in one basket or Bitcoin in one basket, or I would want to support decentralization. So I think it's, again, just a sign of how early this industry is, how these things need to be built up. Of course, the regulatory environment makes it very complex. Banks and, you can read into my ex-MD global head at BNY however you want, but banks were greatly influenced by SAB 121 or inhibited in how they could grow their business. So those things need to unfold, and then hopefully we'll live in a multi-custodial world, and hopefully we'll also have some, some sense of DeFi custody, which is a whole other conversation, but decentralized custody, but that I think is further down the line.
Okay.
And if I could add, too, a number of the early conversations when the ETF just launched earlier this year was around the custody component. And it was how are each of the providers, the 11 issuers of the ETFs, who are they custodying with? What controls do they have in place? And were there insurances? Now, just note, for many people, Coinbase has an institutional custody as well as a retail custody. So they're very, very different. And what you're going to find is the issuers like 21 Shares, Grayscale, et cetera, are using the institutional format. So it really is very important. But that's something that the home offices, the due diligence teams are really, really keying on. That's where the comfort level is going to come in. So although you've got very, very similar products that might have very similar expense ratios, there's the fine-tuning of where the custody is done and how that's done is what's going to get certain firms onto platform availability.
Yeah, and going off that, do you think it's from like a risk perspective, the reason they don't want to kind of take that custodial responsibility on themselves? We commonly hear, not your keys, not your Bitcoin, right? So I guess from your perspective, what is the reason for these large institutions not to take custody, rather using a third-party service, Anchorage, Coinbase? Any thoughts there?
It's incredibly complex to build.
Yeah.
It's incredibly complex to operate. It's a pain in the butt, and it's very stressful.
And you were mentioning decentralization. I guess how would decentralized custodial
Well,
work?
I was thinking more in the context of, and it was probably not a correct use of the word decentralization. I was thinking more in the context of multi-custodial. So it was more of like an old school way of saying decentralized risk, which right now is very centralized in a series of custodians. And you can imagine a scenario where there could even be multi-sig between different institutions, but that's a little far off. But yeah, the reason why people don't do it is it's really, really hard. And it's also hard from a regulatory standpoint to do.
Gotcha. All right, question for Kevin. I guess, what are the key regulatory hurdles that digital asset ETFs face today? How can asset managers and advisors navigate these challenges effectively?
We saw that take place when the SEC approved Bitcoin and then Ethereum as well. That was the massive hurdle to get broader adoption. And until that point, registered investment advisors, wirehouses, family offices were very, very reluctant to take on exposure to those, simply because of the complexities of holding the strategies on their own. So by doing that, it validated the asset class as a valid component within portfolio construction. That will continue. It's still an evolution, though. You're still seeing certain companies that will take a very conservative view and are waiting to see how the market bears out as an asset class. So still understanding where digital assets fit within a portfolio, it's still a work in progress for many.
And I guess going off that, for advisors looking to explore digital asset ETFs for their clients, what are their initial steps they should take to evaluate these products as viable investments? And what opportunities do you see emerging in this space?
You want me to take that? Or?
Yeah, go ahead.
Okay.
Yeah,
I think, one, the client has to understand certainly what the asset class, understand how the asset class works. The volatility is inherent. I think it's really important that when the advisor is talking to a client about this, one, I think setting the parameters as well. We talked about a 1 to 5% portfolio allocation. Many clients are simply looking at this as a FOMO.
Yeah,
And
definitely.
they've seen it. And again, I was introduced to Bitcoin back in 2012. I could not get my hands around it, and it took a while until my son actually, when he was in college, he pitched Bitcoin to his hedge fund investment group, and this was when Bitcoin was trading at $400.
Yeah.
And so it was a $10,000 investment, so it would have been 25 coin at that point in time. The group denied it, and this is a group of folks that were sitting around really getting into the
College age students, you think most innovative,
Exactly.
forward-thinking people.
Right. So then you look back and you see where it went from 400 to where it is today. But it's also, I think it's important that advisors assess what the client's reason for investing is, what is their risk tolerance, and what is their need for that money down the line. And that's why I was suggesting it's got to be placed for monies that are a little bit farther down. This is not designed for current income needs, for sure.
Yeah, and I guess Hadley, working in the DeFi space, we mentioned FOMO. You probably see a lot of crypto projects, new projects spinning up where the FOMO is, very real. I guess, what are your thoughts in the environment? Do you see other projects in the space, gaining an ETF approval in the near future? I guess, what are your thoughts of kind of navigating DeFi projects, new blockchains, navigating to maybe one day?
I mean, ETFs are basically passive. So, if you wanted to really invest in emerging projects or technologies, and I don't know if anyone's thought of this, you could have a fund or a mutual fund that targets, I guess you could call emerging small cap DePIN projects, and I think that would be pretty cool to invest in because DePIN is very interesting. But as it relates to ETFs, we've got to getting the first one, as Kevin talked about, was a 10-year kind of battle that only happened with litigation. And then we got Ethereum kind of more quickly than people expected. I think and hope the next one is Solana, which I think makes a lot of sense. It's a chain that's the third largest, that's getting actual usage of people actually building projects. And I would encourage people to tune in if they're not there to Breakpoint next week in Singapore. I don't know, but my sense is there's going to be some interesting announcements on the Solana network. And I think that will bring in this idea of, okay, there are fund products that will allow everyday investors who aren't comfortable investing directly to be able to invest or participate in some of these projects. The word invest has to be very carefully in this context. So suddenly I'm thinking like a lawyer because that kind of hints at securities. But I would say participate.
Awesome.
If you think about where some of the private placements are going right now, it's generally multi-coin types of products, and Grayscale has been introducing those to their individual investors and advisors for a number of years. There's a strong appetite, and they can be managed actively as well. So that's important. Obviously, you don't have the overall regulatory component to that, so it might be more of a finite audience that we're seeing with that, but there is strong appeal. And that's when you start to get into the family offices, the multifamily offices, et cetera, and they can almost build these products depending on the need for a particular family if it's a large enough investment. So that will help. And for some of the folks that are here today, they're talking about building out their own products. That'd be great because then you can really get granular or get into certain areas that would be very appropriate for certain audiences. Now, ETFs in general, like you mentioned, Hadley, have got the restrictions for good reason. I think this is where the investor makes a choice of maybe make it really easy. Maybe I want to go to the Schwab or Fidelities and be able to buy the ETF right there, and that's enough for that certain investor. Others may want something a bit more exotic or a bit more actively managed.
Awesome.
Yeah, it's a really important point. ETFs are but one traditional financial services product, and they serve a specific area, but they don't serve other areas. And the private fund and other fund manufacturing industries have a building product for some time that serve other areas.
Yeah, coming up on time, I just want to make sure we at least take a couple of questions from the audience. Sorry. Oh.
Hi guys. I just wanted to say, one of the most interesting things of the ETF launch wasn't the initial inflows to me, but actually on August 8th when the carry trade happened, there wasn't that many outflows. There's actually inflows into the Bitcoin ETFs, which is that surprised I think the whole market. But I wanted to see what you guys thought about that. If you think the demographic of the ETF holders are just resilient like regular Bitcoin holders, or if this was kind of like a, we'll hold, we'll wait it out.
So sorry, when the what happened? I
The
missed.
carry trade.
Okay,
the carry
yeah,
trade
yeah.
Fallout. August.
Yeah.
Yeah.
You want to take that?
Yeah, I can, or you
Yeah,
can.
you go ahead.
Yeah, I think it's a different type of investor than the person who holds Bitcoin directly. So it is interesting to see the dynamics of how the ETF holders buy or the outflows or inflows, and I think it is inevitably different. But so yeah, that's my only observation. I would agree. Yeah.
Great talk, guys. Thank you. I was curious. You hadn't talked about SAB 121, the SEC rule that restricts custodians basically have to hold the crypto on their balance sheet. And so I always thought that was a big deterrent for, like, especially your former employer, Hadley, Bank of New York, from getting into this. So what's your prediction? Like, assuming that rule does go away, do you think that changes the landscape? I imagine Bank of New York would jump into this, as they are a custodian for a lot of other ETFs already. But I wonder if that lowers the price, the expense ratios in some of these ETFs. What do you think looks like should SAB 121 go away?
Yeah,
Thanks.
SAB 121 is like, it makes me sort of twitch. We were 6 months away from launch, and an email came from Yahoo Finance. Oh, what's the SAB 121? Oh, it's nothing. Oh, it's something. And that's why you saw Coinbase very quickly adjust their terms of use for bankruptcy. And the pickle that it put regulated banks like Bank of New York Mellon or State Street or other large too-big-to-fail banks is that banks have very, their balance sheet is incredibly tight and regulated. And so what SAB 121 says is for every dollar of Bitcoin that you hold in custody, you have to reflect that as a liability on your balance sheet, and that doesn't work. So it's a big deal. I know I think as recently as this week, there were some announcements of maybe exceptions for banks. I have no inside information or nothing to share, except to say I would imagine that the banking industry is continuing to figure this out and figure out a way that it can do it. The really interesting thing that people don't understand about SAB 121 is that the reasoning for it from the SEC was not anything related to Bitcoin necessarily. The reasoning was to protect the end investor in the public stock company, that if Bitcoin balances got really big, how could you communicate to an end investor the risk should something happen to the custody program that isn't insured, and what that would mean for the stock price. So it was like a very technical kind of ruling, but the regulatory piece, SAB 121 is one part of a story that some people call Operation Choke Point 2.0 that I'm sure everyone's familiar with. So we'll have to see what everything, how things unfold and the election and all that kind of thing. But once that is dealt with, I could only imagine that banks would get back in.
Hi, guys. I'm Calvin. Thank you for the discussion. If we do get Solana ETFs, hopefully institutional buyers do not jeet their coins as bad as every other Solana holder.
Yeah.
I have one question about an aspect of the Bitcoin ETFs, such as IBIT, BlackRock's. I believe that they are allowed to settle trades off-chain, which opens up the ability to over-leverage or manipulate the market. And I was just wondering if you guys know anything about that or could speak to maybe a pro and a con about that aspect that allows them to settle buy and sells off-chain.
And is the settle? I think it's 24 hours, correct?
Yeah, I'm not familiar with that
Yeah.
from an operational perspective.
I'm not familiar either, except to say I can't imagine a regulated entity would do anything that they shouldn't do.
Yeah. And I think those were some of the concerns that the SEC would have had. There's got to be some guardrails on that as well. I think in general, we were talking about the SEC earlier. If Hester Pierce has her way, then there's going to be more approvals. I think that's a real positive.
So I have a question. So this is kind of leading off of what you said earlier, Kevin, and then what Harry mentioned as well. So I feel like the traditional mindset of what's been kind of holding back institutional adoption as well as clients purchasing these type of assets has been the lack of a way to generate a price target, like a traditional equity or like a fixed income product. And then, as Harry said, when they launched, we saw record-breaking inflows for the ETF. So my question to you is, how much is it really about creating, determining the value of these assets versus what you said earlier, Kevin, whereas like communicating that this is a long-term, position in your portfolio, it's not to generate income.
Yeah, I think if you look at it initially, many of the flows came in from Grayscale's trust over to the Bitcoin ETF, or any of the Bitcoin ETFs, depending on where it was. So you saw massive inflows in the early part. There were also investors who were sitting on the sideline waiting for a regulated type of security to come in. We do believe, there is speculation. In terms of valuing Bitcoin, it's tough to say specifically, but a lot of people just want to be part of this journey. I think that is really, really important. Yes, you get to some of the more sophisticated institutions or investors, they probably will have price targets on there. If you look at some of the research groups that are following Bitcoin actively, and again, I'll go back to ARK. Kathy Wood has talked about, she at one point talked about 250,000, then 500,000. There's $1 million level out there at one point. It probably will take some broadening of the investor community out there and from a buying perspective to have it go up there. But there's also awareness around the various strategies. It's not uncommon that you're going to see that. But as scarcity begins to build in, as you see another halving perhaps come down the line, maybe that's what causes the buy-in, the supply and demand issues to cause the price to go up. But yeah, we're seeing that.
Thank you.
Yep, and I think we're up on time now. Really appreciate everyone's attendance, and thanks for the questions as well.
Thanks.
Thank you.